So here we'll be looking at support and resistance. Okay, we'll be looking at support and resistance. Okay, so what is support? Now, in the market, there is what we call support, there's what we call resistance. So just look at the simple definition. It will give you a headway to understanding what it means. Say support. This is like a floor where price holds, where price turn around and go up. Price respect this region so much. We can authoritatively say this at this region, there are so many buyers or high demand. We can also say support is where the law of demand is effective. Hence, the conclusion that we buy at support. Now, because we want to buy at the lowest price, anticipating a rise, so we can sell at a very high price and make profit from it. Now, let me just use a layman understanding for you. You are in a story building, all right? You are in a story building and you are in the ground floor. Now, when you are in the ground floor, okay, let's say you are in the first floor of the story building. You are in the first floor. The ground you are sitting on is the support, or you are standing on is the support. Why is it support? It's supporting you. Now, if you throw something from up, will it easily fall to the ground from the floor, as in break the floor and go to the ground floor? No, because there is a decking, all right? There's a decking and it's holding. So whenever price comes from up to hit that bottom, there is likelihood that since it's unable to break through to go down, it will not start going up again. So that's what we call support. It's as simple as that. It's because it has hit the ground. The ground is so hard, it cannot break through there. They need to hit it 1 million, plenty times. Then over time, when that ground becomes weak, it will break and it will pass through. But coming for the first time or the second time, it may not be too easy for it to break through and go down. So what next to do is for it to go up. So that's a simple analogy I can give you for support. So that's where price hold. And what you want to do at support? You want to buy at support so that when price go up, you sell. So that is support. Now let's look at resistance. Let's look at, but before we go to resistance, now support, another thing is that let's assume you are the first floor now and the floor is supporting you. And you begin to use hammer to hit it. Hitting it the first day may not break it. Hitting it the second day may not break it. But as long as you continue to hit it over time, the thing will weak and it will break through. And that is where support is broken. All right? So when support is broken, it will not go further down to another level of support. Now that initial support now becomes resistance. So now let's go to resistance first. So this is like a ceiling where price struggled to break through or go above it, but couldn't. It is that region where price is always rejected and pushed back downward. Hence, it is needful to draw the resistance line to serve as a guide. We sell at resistance because our understanding of what price does at that region, because of our understanding of what price does at that region. At resistance, there are so many sellers at that region. So price falls, respecting the law of supply. Now, let's now look at resistance. You are in the ground floor of a story building. Now, the first floor, when you're on the ground floor, you look at the ceiling, is actually the decking of the first floor. So are you going to pass through easily? No. If you jump, you will hit, your head will hit it and you come down. All right? So you need to really hit it severally, maybe with hammer, with sledgehammer, hit it, break it before, over time, when it becomes weak, it will break before you pass through. Now that resistance, if it breaks and price go through it to the next level, that resistance now becomes support. All right. So now let's look at here. So note, support can become resistance and vice versa, depending where price is coming from. It is also noteworthy, as much as price touches the zone, the weaker it becomes until a full force breaks through it, after which it becomes a support or a resistance, as the case may be. So this is just exactly what I've been explaining to you, all right? As long as price touches it severally, over time it will become weak and price will break through it. So right now, I'm going to stop share here now, then I'm going to go to the chart, the same chart we used before, and we'll be looking at support and resistance. So now, we are now going into candlestick analysis gradually now, because what we are going to be doing now is looking at support, all right? So we are looking at the chart right now. Okay, so let me stop share here. Let's go to the chart. Let me share again. Okay, so this is actually the same chart we used in drawing our candlestick analysis, candlesticks anatomy, all right? So we're going to be deleting everything here now. Okay, so I want to show us now support and resistance, okay? Support and resistance. Now, so this is the candlestick, this is the chart. Okay, now I want to draw a support. Although support and resistance depends on where the price is. Okay? Now, why do I call this presently now? This is actually a support. Why? Because price has broke through it. Okay, now let me show you something. So at this level here, this place was a resistance. Now price broke through it. It went up, came back, bounced on it. It could not break it. So this is a support. When price was here, this is a resistance. Price broke through it, it became a support. And the price came back to it. It could not break through, and it bounced up again. So price went up. Now, price came back to it again the second time. It could not break through. It bounced up again. It came close, no way, it bounced up again. Before it now finally broke it again. It broke it, it came back to it again, it became a resistance. Came down, broke through it, and at the same time broke down again to become a resistance. So it has not become a resistance for this period, it's actually a retracement until this breaking through it again. So price break through it now, this level now is a support. Now, you will not catch this thing in one day. It's a gradual process. Over time, as you begin to look at the charts, you have a better understanding. All right. Most of the things I'll be saying I may not really make meaning, but by the time you begin to pay attention to the chart, you begin to look at it, you begin to study on your own. Gradually, you keep hearing it every day, you keep reading, analyzing, and you'll be better at it. Okay? You just imagine that I just look at the chart and I drop this line and look at what is happening. There's a bounce here. If you go further in history, backward in history, you will also see that this same place, there's also a bounce. So can you see another bounce from here now? Okay. Can you see all of this happening? So you need to really master the charts. You need to be here to understand. Me, I just looked at it and I drew it. But you, it may not be that easy for you to just look at it once and you bet. Over time, when you begin to do this, it will be as simple as ABC. Because like I told you, what you give attention expands, all right? What you give attention expands, okay? So if you give this chart attention, you get better at it. So you can see multiple touches. This is what makes it a support or a resistance, okay? Then there is what we also call zone, okay? Now there's what we call zone. I'm going to draw another line now to now make it a zone for you. Okay, now a zone is actually, let me draw a zone now. Now this is a zone. Why do we call it a zone? Because as a trader, you don't just look at a line. Now, when you look at just the line, you will be deceived sometimes, most times. You'll be deceived most times because it's a zone. Yes, there is a support and resistance line, but this whole support, this area can be termed as a zone because you can see that some week came, this guy, he did not touch the line. All right. These ones came, did not touch the line. This one came, did not touch the line. This one still pierced through and didn't go further than this. You see, this one pierced through, didn't go further. So this is a zone. All right. Now, you cannot use this to make your decision when you are taking your, maybe you want to enter a trade for your entry, or maybe your entry to buy, you want to target this place, you are watching to look out for a reaction. When a reaction happens from here, you cannot take either a buy or sell. So now let's look at a reaction now. Okay, you can see that we had a reaction here. This is a reaction. All right, this is a reaction into that zone. Now, price came into this zone, but could not sustain it, and it came back out, and this is a reaction. So you want to take a trade, all right, based on your analysis. After the close of this candle, you can actually buy from here. You can actually buy this market from here. And this becomes your stop loss. All right. And this is where we are as take profits. So you see this trade actually, it gave you profits. It gave profits. Okay. So you enter from here, it almost gives you profits here. So let's assume you must have done very well at this point. You take TP1 and you pull back down. All right, pull back down and another reaction from here again. So you need to understand, those of us who are in my signal room, you know, sometimes some person will ask me, why did you take this trade? All right, there are things you see in the candle that will make you take a trade. Now, this trade you can actually take this trade 2 times. This is daily candle. This is daily candle. So everything that is happening here, it takes a whole day for one candle to close. So you see this candle now, you enter this trade on this after the candle close here. So this trade took you how many days to take profit? 1, 2, 3, 4, 5 days, and it took profit. So let's see how many. That's 146 pips. All right, 146 pips. So if we are looking at, so you can see this is actually how you become good at the market. So let's look at this other one now. So the same region, the same zone again, this market came back here for the second time. Now, you see this candle. This candle is what we call engulfing candle. All right. This we are going into advanced now. From intermediate, we are going into advanced now. We're actually doing basic, but I'm trying to break down things for you to understand. Okay. So now this is a candle, a small candle that came here. Then this candle broke a very big, so you can see the size of this candle and this one, this red one. This one engulfed this one. You know what it means to engulf? To engulf means to swallow. So he swallowed this one almost 3 times. There is no two way about it from this region because it's happening from a zone. So because this thing is happening from a zone, you don't want to think twice. So as soon as this candle closes, you can either not take another trade. So you put your entry here. This is where you are going to enter the trade. Your stop loss below the engulfing candle, and you take your. Now, another thing about take profit is that you may not know what is going to happen because this thing, by the time you are taking this trade, these candles have not happened. They have not, you've not known what is going to happen yet. But how do you now measure to take profit? So your first take profit, you want to take your first take profit here. Now you are looking at this level. So this is the level you have seen before. So this level is your take profit. So when you put your take profit here, you see you have made 137 pips. Okay? So this is enough. You can actually leave the market from here. So this is how to trade with candlesticks. All right, talking about analysis and you know, we already did anatomy. So that is support and resistance. So I don't know if with what I did here, the support and resistance is understood. Before I came here, I already used analogy of a decking, a story building, both the first floor and the ground floor. All right. And I have come here to also show us, all right, with these charts, at least for you to know how it looks like on the chart. So at this point, I don't know if there's any question. But before question, please keep your question. Let me stop share here and go back to the presentation. Let me stop share here and go back to the presentation. All right, okay, no problem. Let me end this one here so that I will do the next topic is trend line. Okay, so trend line, I will record trend line differently. So let me stop recording so that we can ask questions.